Hello and welcome to Sectors Up Close. I'm Paul Barber. Our topic today is the travel and leisure sector, and my guest is Chris Beecham, Chief Market Analyst at IG. It's been far from smooth sailing for this sector. As measured by the FTSE 350 travel and leisure sector, it's down by about 27% so far this year. That compares with the 6% drop in the FTSE to Monday. Far from being a purely domestic play, this index includes a big mix of international bellwethers, including gambling giant Flutter Entertainment, Intercontinental Hotels Group, cruise operator Carnival, and British Airlines owner IAG, among others. Early hopes that the industry would take off as soon as the pandemic restrictions were lifted have hit turbulence, as airlines in particular struggled to cope with demand, forcing hundreds of flight cancellations amid soaring fuel prices. Cruise operators are struggling with debt built up since the start of the pandemic, while hotels are finding it hard to find the armies of low-paid staff they require. So what's on the horizon for this sector? Let's ask Chris Beecham, IG's Chief Market Analyst. Chris, thank you very much indeed for joining us today. So first of all, weren't things meant to be getting back to normal when it comes to travel demand, with countries like Japan just today reopening to tourists? Shouldn't we be in better shape?
I think that was the expectation, certainly a year ago, that things would start to look up. People wanted to travel more to escape the boredom of lockdowns, and that meant they would want to be sort of escaping on holidays, and that certainly hasn't been the case, really. The rise in inflation, higher interest rates, and the rise of commodity prices across the board really squeezing companies in all these sectors.
Of course, the macroeconomic headwinds are significant for travel and leisure, but we've been here before, haven't we? How does inflation impact this sector in particular?
Well, if we look at, I suppose, the demand side first, if you like, really, consumers struggling now on both ends of the spectrum, really, not just with the rising cost of energy and food bills, but they're paying more for their borrowing and paying more for their mortgages. So they just fundamentally have less to spend on these kind of holidays, so that maybe they're not flying as much, or they're not flying as far as they used to in order to cut costs. But then you've got the companies themselves, as you mentioned. We're dealing with high input costs across the board: food, wages, energy. Everything is really hitting the sector in a way that we haven't seen, I think, in at least a decade.
Chris, we've already had a big sell-off, haven't we? Is this not the time to jump in?
Well, I think, as you say, the macro outlook is so bleak that things that are cheap now probably will get cheaper in the near term. And this is a market really that isn't being too discriminatory in the stocks it sells off, really. I think everyone is being sold down together, regardless of the sector, regardless of the subsector they're in. I think the problem is now that you could think, yes, things might get better over the medium term, but I think the stocks could get an awful lot cheaper in the short term.
And this sector, it's pretty diverse, isn't it? We're not just talking about airlines or hotels. There's online gambling, pubs, cruise operators. Are any of those picks better positioned?
Well, I suppose you might argue pubs, perhaps a domestic play. Yes, you're facing the same wage and input cost issues, but perhaps people staying home more. We had Wetherspoons perhaps saying some of the worst was behind the shares bounced last week. So perhaps there are pockets of at least short-term relief in maybe that we see over the next couple of months things start to improve.
And what about going bargain hunting for something with a more US focus? What's the picture like there?
Well, perhaps the US benefits from the better outlook, even if the Fed is committed to raising rates more sharply than everyone else, because, as we saw on Friday again, those US job numbers still relatively strong, wage numbers still quite good there. So they face, of course, the same problems in terms of wages, but perhaps Americans will feel more inclined to spend in the months to come than their European cousins.
Chris Beecham from IG, thank you so much.
Thank you.
And that is it for your roundup of the travel and leisure sector. I'm Paul Barber, and this is Reuters.